So that's what he's talking about. You need to understand how a company is born, what all it goes through to becoming public limited. Now there's this huge portion in this which is not covered in this, which is in today's world, is venture capitalists.
Okay.
Private investors,
Yes,
equity investors were there.
the one
Those guys who are
big pay bankrolls.
Those guys have come sandwiched themselves between a company going from a small company to going IPO. These guys have come inside the middle. They're eating all the food in there.
Yes, sir. He also says that venture capitalists doesn't come at first, sir.
Yeah.
They will come when the productions are finished, when a company is ready to sell the product. That time, the venture capitalists will swoop in the companies and get all the...
because to going IPO, there's a lot of paperwork and a lot of money involved in going IPO. That's why if you see even Ola and all that, they're still going IPO, still going Oyo, still going IPOs. It's just not as simple as just going to SEBI and saying, here's my company, here's my paper, here, give me which account I have to pay so much to. I paid and now I'm public limited. You understand? There's a method to it. So you need a venture capitalist to bridge that gap for your company to become big enough for the public to be interested in you.
So we need venture capitalists to invest in our company.
Yeah, to help you grow to such a size, and the venture capitalists will help your company grow to a size, and also make sure your company gets enough publicity and everything, and make sure you're a success.
So that is like yesterday's video you told about Warren Buffett investing in Japan's company.
Correct.
He's a venture capitalist.
He's not a venture capitalist because these companies are already public limited. Japan needs people to have faith in their economy and invest in their large caps. So Warren Buffett is investing in their large caps.
Understood, sir.
Their large cap companies are in doldrums. So their economy is boost it up and bring it out.
Understood, sir.
Because only when the share price starts going, the profit starts coming, then they'll reinvest. Japan needs a lot of reinvestment. Lots of tracts of Japan, except for Tokyo and a few metropolitan areas. The rest of the country is in doldrums. So a lot of money has to come back, be reinvested. And Japan is a complicated problem. We can talk about it in a separate video. But it's a really complicated problem. Warren Buffett is only one small piece of that. But he's a big piece in the sense that it attracts a lot of attention to their companies, to their stock market.
Sir, but I have one doubt when I'm reading this chapter, sir. I don't know if it is silly or not, but
No doubt it's silly, man.
Yes, sir. But my doubt is, the first computer that Steve Jobs and Steve Wozniak made is using all the generic computers parts putting together and making a single computer, sir. If a company makes any product, they will have a patent, sir. Correct, sir? So they are getting all the computers parts and making it one together. Every company has a patent of...
There's no patent for a screw. There's no patent for a table. There's no patent for so many things are there, like a wheel. You can't go get a patent for a wheel. You have to make it unique, very special, and make it different from the rest. And then they'll grant you a patent. Getting a patent is not easy. You just cannot draw one comb and put your name on it and say, this is a comb. Looks different, see? So give me a patent. They will not.
You have to be unique to get that.
There has to be something. There are certain criteria. And if you're taking 3-4 different parts and you're making a new product, you cannot claim patent for using that part. He's taken all that and he's made something new. So when you're making something new out of these, it's all the sum have come together and made something new. It is not a motherboard. It is not one microchip. It is not 4 screws. It's not one hard drive.
It's
all coming together and making one product. So that has become a new product.
Understood, sir. Okay, sir.
Understood? Otherwise, every single car that comes out, it'll be slapped with a patent.
Correct, sir.
I only invented steering wheel. I only invented seat belt. I only invented that button.
Correct. Sir,
but there are patent fights going on. There are lots of... Google is fighting with Microsoft. Apple is fighting with Samsung. Samsung is fighting with Apple. It's there. But it's very hard to prove it in court. That guy has copied your exact design. But what he says is valid. Especially when a young company, someone can come and look at your product and steal it and go. You might be having one Red Bull with your friend in the terrace, made one prototype and showing it to him and saying, and you might be looking at it and saying, very nice, very nice. Then he goes behind, makes a phone call to his other friend who's sitting on the other side, who has the capacity to make this mass production. Overnight or Sunday, you'll go and see the next day in the paper, everywhere it's advertised. Like, hey, that's mine, man. It's happened to people. There are many stories about it. Then they'll go to court. Then you have to prove, which is very difficult.
Understood, sir. And I don't know how to pronounce this, sir. This city in
Massachusetts.
Yes, sir.
Massachusetts.
Yes, sir.
Massachusetts. Massachusetts.
Okay,
Yeah,
sir. Massachusetts.
Correct.
On that city, they have a regulatory system, sir, to protect people from fake stocks and all, sir. On that time, they advertise stocks in the paper, sir. So on the time, Massachusetts regulator put Apple in the dangerous category, sir. So that type of people got shut down from buying Apple shares on that time, sir.
Didn't happen.
Yes, sir.
That's Massachusetts. In India, SEBI can do some cuckoo things only. Can suddenly say this company is not looking all right. We are stopping trading in this company. Today, this company cannot be bought or sold. As an investor, you get locked out. You get locked out of BSE and NSE. That's a grey market. That's why grey market is. Anand Sir keeps saying in grey market, Tata Technologies is 400 rupees. Then in grey market, Domes is selling at 700 rupees. But be careful. We don't buy and sell in the grey market. Simple reason is it's unregulated. It's like a black market. You go black ticket. You go say everyone tells you don't buy, but you want to see Vijay's movie Leo, so you go buy black.
Yes, sir.
The guy says no, this is not our ticket, and you're like, hey.
We can't do anything. Sir.
Yes, it looks all like the same, everything, same
Correct,
number. Then you find out he's faked it. What will you do?
We can't even get our money back.
You can't go to the police and complain. You broke the law. Who asked you to buy?
Correct.
You're not allowed to buy. Same thing. Grey market also same situation.
Understood, sir.
But SEBI decides which share sells, when it sells, which company is there, which company is not there. Once you listed your company, you cannot stop selling your share. You have to go to SEBI and delist it. And when you're delisting it, the investors are protected. So you have to pay every investor money back. So you have to make an open offer and all that. That's what Vedanta is trying to do. No, try to take the company private. Elon wanted to take Tesla private. It's not so easy. You just can't cost a lot of money.
Understood, sir.
So in this chapter, he talks about ownership.
Yes, sir.
How stock and money are related together.
Yes, sir.
The company has a capacity to create money by printing stock.
Correct, sir.
So if a company wants to create money, all it has to do is create more stocks.
Yes, sir.
So it can create stocks out of thin air. As a board, once you've formulated the company, there are ways and means of creating money for a company. Raising cash, it's called. So like how Indian government can tell RBI to print currency, the owners of the company can decide, okay, we need to create some funds for our company to do some new project or buy a new company.
So we can create stocks.
Yes. Yeah, but it's not unlimited. There are rules and regulations there also. Otherwise, nobody will invest money. It was like the Wild Wild West. It was like that 300 years ago when the first stock market came. Nobody knew what was happening.
Correct, sir.
That's why we had many bubbles and many crashes back then. Periodically, every 3-4 months, one stock market crash will be happening. The big famous ones we all talk about, like the tuna mania, Mississippi bubble, and this bubble, the big ones. But there are lots of small bubbles that keep on happening. And company-specific bubbles will be there. One company will come, price will go somewhere else, and suddenly overnight the company will disappear. Nobody will know where the company went. Like Bitcoin, everyone last year was talking Bitcoin, but now we're not talking AI. But so next year, God knows what the flavor of the season is. Now Bitcoin is fighting to get back into the news by saying we've gone to $42,000, $50,000. They're trying to get some eyeballs on Bitcoin now. How public will move, God only knows. So anyway, this is an interesting chapter. So it tells you all about what's happening.
Yes, sir.
Correct?
Yes, sir.
So we made great progress. Now where are we? Which page have we come to now? So viewers also, people want to catch up with you or who have gone ahead of you know where we are.
Sir, 178. Sir.
178. So we'll pick up from 178 next time. Okay?
Okay.
Thanks for watching the podcast, guys. I hope you found it informative and entertaining as always. See you in the next one soon. Bye.
Thank you.